Good morning, everyone. Keith Johnson, CPA here with the Business Beat for June 8th, 2021. I want to give a shout out to our first subscriber, Yay, Best Word Viral. They are a video company from India, Pakistan, that area. They make a lot of comedy videos. They're a little dull oriented, nothing real adult, but PG-13 variety. And we definitely appreciate them. Thank you so much for subscribing. They are our first. Yay! Hopefully, it's the start of many more over the next several months and years. Anyway, I wanted to talk about some stuff today. Bitcoin is taking a huge beating. In fact, it's lost half of its value since in the last 2 months, probably a little bit before then. Well, I remember doing a presentation, a lecture for the Institute of Management Accountants National Conference. I did it back in mid-April, and it was on cryptocurrency. Well, it was on blockchain accounting, of which cryptocurrency is an important part of it. And at that time, cryptocurrency, Bitcoin was running at about 59,000. And even that next week, this would have been mid to late April, it went up to 61,000. Well, today it's 31,000. Why? Because the Justice Department correctly kind of was able, I don't know how, but they were able to recover a lot of the Bitcoin that was paid out by the Colonial Pipeline Company. Now, if you recall, a few weeks ago, maybe about a month ago, there was a ransomware attack on the Colonial Pipeline, which is a major oil pipeline roughly running from the Louisiana, Texas area to the Mid-Atlantic. And it supplies, either directly or indirectly, a lot of the oil for the eastern half of the country, including Florida, but not most of Florida's oil is actually barged into Miami, Fort Lauderdale. So we weren't too affected by it. But anyway, what happened was they were forced a ransomware attack. Basically, what it does is it locks down your computer system, and what it does is the scumbags that do this stuff, basically what they do is they request ransom in the form of Bitcoin. Why? Because Bitcoin is harder to trace, and or so thought impossible to trace, and so it was just a safe measure of it leaves much less of an audit trail, which was kind of the point of my discussion. Well, actually, my point of my discussion when I did the lecture was it has a solid audit trail, but they used but they like to use Bitcoin. And so what happened was the Colonial Pipeline Company paid the trash that caused all this. They paid them off in ransom. I think it was like 5 to 10 million, something like that. I don't know if we ever got the exact amount. Well, it came out yesterday or Sunday, Monday, that the Department of Justice had recovered a big chunk of that ransom in Bitcoin from the scumbags. So, they returned it. In fact, actually, Colonial CEO is actually in front of the Senate as we speak, answering questions on why the heck did this happen and what steps they are going to take to harden their IT infrastructure so that it doesn't happen again. But what happened was since the Department of Justice was able to get it, it pierced the veil of invincibility of Bitcoin. And so what that means is that now, you know, if you have any kind of bank accounts and all of that, you know, it's always been, oh yeah, the government could freeze them or something like that. Or if you had, any kind of investments, the government could freeze them. But if you had Bitcoin to this up until now, it was relatively safe from government overreach. Well, that's now been pierced. That's now been shattered. So that now, with enough work, the federal government could take your Bitcoin. So it's not the invincible, solid mechanism for monetary exchange that it was purported to be. So as a result, it's dropped now down to roughly half its value. It was trading this morning at 31,000. So it's going to be interesting to see how what the long-term effects are. I thought it was overvalued anyway. I'm not a big fan of Bitcoin. I mean, I know it's the future, and I did speak on that. But if y'all have ever known me, I'm a stick to the fundamentals, stick to conservative type person. My career has gone through two major bubbles and corrections. The dot-com boom of the early, like very late 90s and 2000s, popped with the 2001 terrorist attacks. Actually, it started before then, but once the Y2K thing came and left, a lot of the tech stocks collapsed because they were overvalued. And then, of course, the real estate boom in 05, 06, 07, and then the collapse in 08. I always wondered, why am I not getting into this? Why am I not, investing? And turns out, had I invested, I would have gotten burned. So I think it's similar to that. But I do think in the long term, Bitcoin will be more, and other cryptocurrencies like Dogecoin, they'll be more. So, they're here to stay. Some other news, some important some important economic numbers will come out this week. For instance, the inflation, CPI, consumer price information, will be coming out Thursday. That's going to be very important. We are looking at a consensus projection of 0.4% overall, and maybe 0.3 to 0.4% in the core. That's food and energy prices, which would equivalent to about a 4.8% increase. Now, that's a big jump over what we've been used to the last 20 years, where inflation's been roughly 1 to 2%, and that could affect the Fed's decision on pulling back, which we'll get to in a minute. Also, the Chicago Consumer Sentiment Survey, or University of Michigan, rather. Chicago's more producers, but University of Michigan Consumer Sentiment Survey is going to be out later this week. It is expected to be sharply higher, which is good, but maybe not. Depends on how the recovery on the employment and the supply chain are. But the initial reports are that the consumer sentiment is that where the economy is about ready to take off as we're booming. The projection now, they came out with the second quarter GDP projection of roughly 7%, which would be the highest quarterly GDP increase since like 1984. So I think there's a good chance that we're going to see a lot of growth, but what that's going to do is it could very well overheat the economy, which is being reflected in the inflation numbers. So we're starting to see some news that the Fed maybe as early as July, either this next meeting, or their next, within the next two Fed meetings, and they meet roughly every 6 weeks, that they might put some language into their meetings saying that they are going to start tapering off the growth of money supply. Basically, what that means is that the Fed, basically buys up stuff and puts money out into the market, and it's called they do what's called quantitative easing, and the purpose of it is to put money out into the economy. Well, with the additional money, that tends to prop up the stock market. For some people, not for everybody. The problem with that is that, yeah, it does tend to prop up the stock market, but the fundamentals ain't going to be, aren't affected. And so, because a lot of corporations are just looking out for themselves, and they are not into the, they just want to buy back stocks and do that with the money. So we are, the fundamentals, I think, will come back a little bit as people go back to work. But I do think that we are seeing a bubble happening. I think the Fed sees it too. So I think what's going to happen is that I think this next meeting the Fed does, and I think it's next week, if I remember right, I'm not sure, they will start forewarning us about their eventual taper. So right now they're basically putting 120 billion with a B dollars of cash into the money supply every month. Okay, and I think what's going to happen is that for a couple meetings they're going to forewarn us, and then probably later this summer they are going to start tapering off the quantitative easing. And so what they're going to do is they're going to put less money into the market. So that means less liquidity, and that means that the stocks tend to not go up as high. And to be honest, right now, because of debt and everything, I'm not sure how much the stock market or the Fed can taper. The last couple times they tried to taper it, stock market tanked. So we'll see what happens. But I am securities licensed. I have a Series 6 and 63. I do not have a 7, so I can't trade stocks. But I would recommend, if you own, any kind of stocks or whatever, at least start thinking about cashing them in, maybe moving your money into different investments that are a little more recession resistant. Reason being is what's going to happen is when the Fed decides to start, tapering the quantitative easing, and they do this to fight inflation. What's going to do is it's going to tank the stock market. Start to see, reports of an expected correction of 10 to 20%, and as a result, people could lose value. So I'm just saying, if you own stocks, if your money's in, if you have a big exposure in equities, you might want to. I wouldn't take any drastic measures, but I would just think about it. Start thinking about it. So it's pretty good. It's for the time being, I think we're okay, at least for the next few weeks. So we'll get a pretty good gauge by the end of the week on where everything is going. No new major news on taxes. We're seeing people, the discussion going on in Congress about the budget and the infrastructure, but no major changes in tax policy in the latest iterations of the bills are coming up. So no shocking news there. So I will leave you for now, and I will check in tomorrow. If you have any questions, please let us know, and please subscribe too. And you will want to build it up to the point where people might take us seriously, but we'll see. But we do appreciate Best Word Viral, and hopefully we'll see others pretty soon. So thank you so much for coming, and I will talk to you soon. Talk to you tomorrow, and have a great day. Bye.